other side of the coin that we haven't touched upon, but with these potential repairs that are coming up, they cost money. And so then we see this playing out in several different ways. We are seeing special assessments come into play with associations. We're seeing increases in HOA dues or loans going in, which sort of tie into the increase of HOA dues.
The cases, right?
Yeah.
So it's just good things to keep in mind. Just make sure that you're getting as informed as possible about the HOA and everything going on with it, right?
It's really important to have a good understanding. And I think like another small but valid point is a lot of people don't realize that interest rates are typically higher for condos than they are for single family.
Yeah.
So let's dive into the more serious side of this, but very, very, very important topic, which is SB 326. And that's a sexy way of saying.
It's our favorite topic.
Yes, the balcony and decks inspections that condos are required to do in order to ensure safety. So do you want to give a little bit of a recap of what this is?
Yeah. I mean, essentially in the state of California, this balcony inspection is now required for all associations.
Yeah.
Meaning condos. And originally it was supposed to be fully in effect, and the associations were supposed to have this inspection done by this year. It's been postponed until January 1st of next year.
Yeah.
But it's still, if the reports are, if the inspection's been done, the report's on file, and you need to get a loan in order to purchase the property, your lender is still going to need to see this report. And depending on what is in the report is going to make or break the transaction, essentially, and whether or not you can get conventional FHA, VA financing.
Yeah.
All these government-sponsored entities that back up these loans have these new requirements where if there's issues with any balconies, doesn't even need to be the property that's being purchased, just within the complex. If there are repairs that need to be done, they essentially want them done before they're going to lend.
Yeah, my husband was asking about that too, because as a homeowner, if you have a deck, let's say, that isn't perfectly fine condition, why should you potentially be penalized because someone else in the community, some other unit, doesn't have an up-to-par deck? And the only thing I could surmise, and you would know better, but because with condos, typically you own like 1% of an interest in the community, I would assume for lending purposes and insurance, if someone files a lawsuit because there's, a balcony gone wrong, then that would impact everybody in the complex anyway. Is that?
Yeah, I mean, because when you buy a condo, you do have a share in the common areas as well.
Yeah.
And then, I mean, from, I guess, logically looking at it as well, if your neighbor next door has an issue with their balcony, then, an underwriter may say, well, what's to stop your balcony from having an issue potentially?
True.
Right? Because the whole complex is built the same way.
Yeah.
Right? I mean, unless somebody like vandalized the property or something that's different, right? But yeah, more or less, I mean, that's kind of the gist of it.
Yeah.
From a risk perspective, right? And they want to make sure, hey, we want to make sure everything is up to code and is safe. Right.
Which is ultimately a very good thing. Like we do want
our
properties to be safe. The issue is that it's all happening at the same time. And so for some of the complexes that were like proactive and actually had their inspections done, in order to meet the 2025 deadline, which was the original one, they're now running into issues potentially if their reports are showing anything on them that might raise a red flag for a lender.
Yeah, and it's hard to go from, how it was previously to, oh, now we need this inspection report. We got the report. There's balconies that need to be repaired. I mean, you can't just get somebody out there to inspect it and give you an estimate immediately.
Yeah.
I mean, you can get them out there as quickly as you can, but a lot of these HOAs don't necessarily have the reserves or the budget to do it immediately.
Yeah.
Depending on how much work needs to be done.
Yeah.
And then by the time you do find out what the repairs are going to be, now you've got to get somebody out to actually do the repairs.
Sure.
And it all just takes time. In the meantime, people still want to buy homes or condos in this scenario. And if all that's not going to be done by the time escrow closes, that's where people are really running into issues. Totally.
So do you happen to know who does the inspections? Is Is it a contractor? Is it an engineer? Does it matter?
Yeah, I mean, and there's companies that essentially, I mean, I think they're getting structural engineers out there,
Okay.
right, to take a look at these things.
Yeah.
I don't know.
You kind of have a shortage of those too. Like
I
there's
know.
not one on every
Yeah,
corner.
yeah, but obviously it's got to be a licensed inspector that's a professional and can speak to what actually needs to be done. Yeah.
Yeah, and then I would assume from there, then the HOAs need to go get bids for having the work completed,
Mhm.
and typically you're going to want to get more than one bid, and then
Yep.
the HOA is probably going to vote on it. So
Yeah,
this
then they
could
have to
easily
meet,
take
and
months.
oh, it could take months, if
or
not
years.
longer. Yeah, if not longer. A good example, because we were able to, you and I were able to get one done a few months ago.
We definitely need to talk about
I
this.
believe that report was completed in December of 2023, if I remember, is when they had their SB 326 report done.
So you're way
We got into escrow in February with a March closing date, and the work still wasn't done on some of the units.
Yeah.
So, and that's, what is that, 15, 16 months later? So it definitely can drag on.
Yeah.
Yeah.
And so from your experience so far, which is, this is still fairly new, but if the repair is critical, that's when it's a big red flag for the lender. But if it's just a little bit more like minor, it's not.
Yeah, essentially, yes. And the tricky part is what is critical and what isn't, right? Because
We're getting very philosophy based right now.
So yeah, I mean the one, we'll go back to this example because it was a really difficult one to get done. We were very fortunate
because of you and a couple of other people that really like dug in.
Yeah,
but
I mean,
all the praise.
Everyone involved in that. I mean, we finally got the HOA on board when they realized how critical, if you will, the situation was. We were all working really, really hard to make this happen, not just for our buyers, but the seller was purchasing a home as well.
Yeah.
And it was just, it was, for a little while there, it was kind of messy, but essentially the guidelines for these loans are, if it's a critical repair, it needs to be done. So in our instance, we were able to get, in writing, someone from the HOA to state that we were told by, the person that that did the report, right, and did the inspection and everything, that these repairs are not deemed critical. Otherwise, we would have already repaired them by now.
Totally. Because it'd be like having like a condemned property, essentially.
Exactly, yeah.
They're not just going to say, okay, don't go out on your balcony. Like
Right.
you might fall down.
Right. Yeah. I mean, if you have a report there that's saying there's less than a year life on this balcony, these are critical repairs, it's dangerous. I mean, most people aren't going to want to buy that anyway.
Right.
Right. I mean, that makes sense. It's like if the balcony is dangerous and somebody's going to get hurt.
Yeah.
Of course, we totally get that. But the issue too is there's different levels. There's basically think of it as low, medium, and high.
Yeah.
As far as priority on what needs to be done.
Mm-hmm.
And if it's low priority, then more than likely it's going to be fine. You're just going to need some supporting documentation or information in the file stating that. But if they're all flagged red, high priority, and there's nothing else in there, good luck getting the loan done, right?
Absolutely.
Yeah.
Yeah, that would be really, really hard. And so I think what you were saying earlier is that this particular unit that our client was buying isn't the one in question. This is not the unit that had any issues with their balconies or decks. It was another one in a fairly large complex, but even that held up the loan. It held up the financing.
Yeah.
And so what we're trying to do is just spread the word that if you own a condo that has balconies and decks, even if they're not on the units, even if it's just like walkways, is that right? Like if it's a walkway around the complex?
I mean, if there's a balcony, potentially.
Yeah.
Mm-hmm.
I mean, that's my understanding. So there's a lot of those in like Long Beach, maybe not so much in Costa Mesa, but where you have to go upstairs, walk around a platform to get to the units, probably a lot in Irvine too, where they're going to have that inspection because they have balconies or decks.
Mm-hmm.
And they're probably keeping them up. But there are going to be some places that haven't had the means to do the maintenance.
Right.
And we see it. We see it on all levels when we're showing properties. Oh, this complex looks like it has more deferred maintenance than this one. And a lot of places were built pre-2000, and even places built in the 80s and 90s, their maintenance cycle typically needs to be maintained in order to actually not have issues.
Yeah, absolutely. Yeah. I mean, a lot of, the up to code today is totally different than it was 30, 40, 50 years ago.
Yeah.
So it's, and like you mentioned too, it doesn't even necessarily need to be the unit that's being purchased.
Yeah.
If there's other units within the complex that have issues, you're going to have an issue getting a loan still. Even if, it's so strict with the guideline.
Right.
Even if there's hundreds of units in there in the complex and only one has an issue, you're still going to run into problems with underwriting.
Yeah. Can you share like some example of the question you were telling me before about the 600?
Yeah. I mean, one of the questions when this was coming out, I think it was with Freddie Mac. But for those of you who don't know, Freddie Mac and Fannie Mae are the ones that back up conventional loans.
Yeah.
And they had a question on there. It was like a 600 unit complex. If there's one unit that has an issue with the balcony, can you lend? Yes or no? The answer is no.
Yeah.
So it needs to be taken care of. And that's the guideline. Now, does that mean you're going to have you literally can't buy a property if there's one in there? Not necessarily. It depends on the circumstance.
Sure.
But if there's like a very critical repair that needs to be done on one unit in a complex with hundreds, there's going to be an issue.
Well, and I think like that is something that is good for people to know, because in general, when you're looking at condos, again, like I said earlier, condos tend to be one of the more affordable options for people to buy.
Yeah.
So they look at them, right? And then if you start to see that maybe they have a longer days on the market, or their price seems too good to be true,
or it's fallen out.
Yeah. It's very feasible that it could potentially be having some issues with this bill or some other form of litigation in the complex that would prevent buyers from getting traditional financing. And, obviously, as your buyer pool shrinks from conventional financing to you can't get this type of loan, you can't get this type, you can only be cash, that's going to have a dramatic impact on, the buyer pool.
Yeah.
Less and less and less, which typically shrinks the value to some degree.
Yeah, absolutely. Yeah. I mean, you may have to do non-traditional financing.
And what are the impacts of that?
Well, generally, you're going to have to put more down, usually at least 20%.
Okay.
Whereas on FHA financing, if a condo can do FHA, you can do 3.5%.
Yeah.
Conventional, you can do anywhere from 3 to 5% down, depending on what your loan amount is.
And does this mean a higher interest rate too?
And it does mean a higher interest rate. So now you're 20% down.
Yeah.
You're probably going to be, I'd say, at least 0.5% higher in rate.
Okay.
And they'll usually require the buyer to also have reserves. I know some of the products we have, it's a 3-month reserve requirement.
Yeah.
So if your payment is $5,000 a month, let's say, they're going to want you to still have an additional $15,000 in the bank, plus you're putting 20% down,
right?
Plus your closing costs.
It adds up. It makes it more expensive.
It adds up a lot. I mean, a lot of people that are buying condos are first-time home buyers.
Yes.
So most of them don't have 20% down.
Yeah.
Right. So it's they're really, condos are really good entries to get into real estate, and a lot of people are usually putting something less than 20% down.
Yeah.
And that makes it really difficult if now all of a sudden you have to come up with $150,000 for your down payment.
Yeah.
And then also still have some money in the bank. Yeah.
Well, and here's the other side of the coin that we haven't touched upon, but with these potential repairs that are coming up, they cost money. And so then we see this playing out in several different ways. We are seeing special assessments come into play with associations. We're seeing increases in HOA dues or loans going in, which sort of tie into the increase of HOA dues. But a lot of the HOAs do not have a separate budget item for this because, first of all, this is like a newer requirement.
Yeah.
And so, yes, there are typically reserves for overall project improvements, but if we're looking at potentially a very huge ticket item on par with like replacing the roofs or even more in some cases, like they're just not ready for it. And if you get like a triple whammy of like you need this, this, and this all at the same time, you're probably going to be seeing a special assessment.
Yeah. And if it's a complex that doesn't have a lot of units,
it could be really high.
The burden on the buyer could be very high.
Yeah.
Yeah.
which is why it's really critical that when you are buying, you are paying attention to what projects still need, like, might be coming up and what the budget looks like. A lot of times the HOAs will have a reserve study done to show you, like, how likely is it that there will be a special assessment. Those are very helpful. I mean, you still have to, like, use logic and review it yourself and ask questions, but they are really helpful. So I know a lot of people get HOA documents and just, it's just another piece of paper and, booklets of paper that you get when you're buying.
Yeah.
But you really do have to be aware. Otherwise, you might be really, really upset when you get a huge bill.
Yeah. It's like reading the fine print. Most people are like, oh, I don't want to read this, whatever.
Yeah.
You really do need to pay attention to the HOA docs when you get them, because you just never know, right? And the last thing you want is a big surprise like that. I mean, I've had plenty of clients purchase condos, not even something as big as this, but just in general, associations do, how special they go up a lot. I mean, I had one client who he barely qualified a few years ago for his loan. And I don't remember the exact dollar amount. It was like $500 or something for the HOA. And then I heard from him less than a year later, and it was now like $750 a month for the HOA. And that's pretty significant in less than a year. I mean, that may have been an instance where they were doing a special assessment for whatever reason, and maybe he didn't read the HOA docs during his escrow. I don't know, but it's a big jump, and it's not HOA dues are not something that just stay the same forever.
They're not a locked in, not like your mortgage payment is. I think a lot of people don't realize that. I also think that it's really important for people that are on HOA boards, or if votes are coming up and like there's new people running, that they be very aware about the balcony and deck inspections, and just in general about the budget. I know I sat on an HOA board for a little while. It's been a while now, but there's a lot of issues and requests that are coming your way. This may not seem like a priority, but it really needs to be, because it could have a huge impact on your neighbors being able to sell, yourself being able to refinance. Even if you're not planning to go anywhere, it's just going to impact the overall community. And when you buy a condo, you're kind of buying into a team. Because you don't have total say over everything.
You don't. And a lot of HOAs are poorly run.
Yeah.
You have, and you're not going to know until you actually get in there and see what they're talking about at these board meetings.
Yeah.
What the priorities are regarding, like, how they're managing the budget.
Yeah.
There's a lot that goes into it. And
same thing with property management companies. Yeah. I know many of them have a lot of different accounts that they're handling, and it's overwhelming, and there's too much work and too little time. But this has to be a priority, because otherwise the lenders and the realtors are going to be blowing you up and adding to your workload too, to just get the answers on where things stand.
Yeah. And then another thing to keep in mind too, if you are buying a condo, you down the road, depending on how the HOA is managing things, you may be able to buy it now, let's say, but if it's not being managed properly or it's poorly run and they haven't made these repairs or whatever the case is, a year from now, life happens, you want to sell, you might struggle selling it because you can't find a buyer that's able to get financing. Or if you're somebody that's going into it, rates are obviously still close to 7%, high sixes right now, thinking, oh, I can handle this payment for a little while, but once rates fall, I think they're going to fall next year. I'll refinance then.
Right.
What if you can't refinance then because of SB 326 that's now in effect for that association, or whatever the case is, right?
Yeah.
So it's just good things to keep in mind. Just make sure that you're getting as informed as possible about the HOA and everything going on with it, right?
It's really important to have a good understanding. And I think, like, another small but valid point is a lot of people don't realize that interest rates are typically higher for condos than they are for single family. I've heard a lot of buyers say that they'll just look at whatever they see online, which we all should know that whatever you see online does not mean that that's your rate specifically.
Right.
There's a lot of things you could go into there, but for condos,
that's for another podcast for sure. But that's a good point. Yeah, rates are typically about a quarter point higher unless you're coming in with a pretty sizable down payment.
Yeah.
That's just the way it is on conventional financing.
Yeah.
So your rate's already a little bit higher, and you definitely don't want to get stuck, right? So it's also really important to be working with a realtor that's going to be doing all of this research for you as well up front.
Yeah.
So that you're not going into oh, this is such a great condo and let's make an offer immediately knowing nothing about it. Right.
Yeah, you don't want to get your heart set on something or get yourself too far along and then run into this. I know that I've also been seeing, as more news is unfolding about potential special assessments or special assessments that are just starting to kick in, it's, again, like you said, it can, for one, it can make it unsellable if it doesn't take all the financing options. But number two, it could mean that the seller is going to have to negotiate a little bit with the buyer, because a buyer is not going to, they made their offer based off of, okay, HOA dues are this is the value, but not factoring in, but there's this astronomical assessment coming down the pipeline.
Yeah.
I'm now going to be responsible for after I just put all of my life savings into this property.
Right.
So there's the give and take, and definitely as much transparency as possible. A lot of HOA boards or property management companies won't even talk to the realtors directly.
Right.
So owners that are thinking about selling really need to, as much as they maybe don't want to know, like, they do need to get as much as they can, because it is going to come out. We're going to get the HOA documents.
Yeah, we actually had that issue.
Yeah.
The property management company didn't want to talk to us initially. I think we had to get the seller to send us the SB 326 report initially, if you remember.
That is, and that's baffling, because that seems like something that if the lender's requiring it,
the lender's requiring it, they should have sent it, but they just didn't want to talk to us at first. And that's good for homeowners to know too, that sometimes the management companies are not necessarily providing what is needed for a transaction, and that's why there are holdups. Like, as a seller, you might be like, why is my loan contingency not signed by the buyer yet? Well, buyer hasn't gotten what they need from your HOA. Right.
And, boy, I think the more people understand this, the easier it'll make it to follow the transaction and understand that there's maybe not games being played, but it's nerve-wracking for sure.
Yeah. So, even for sellers, if you're getting ready to sell your condo, do your due diligence and make sure that all of this stuff checks out, so that you're not going to have an issue selling your place.
Yeah. Oh my gosh. Condo owners, potential condo buyers, there's just so much you need to know, not to scare you, but just to help prepare you and
as if real estate's already not difficult enough. We've got the HOA issues, we've got the insurance issues. It's just, there's a lot, and it's really important to surround yourself with people that are going to do this for you. Because, as a buyer or as a seller, you're not going to even know where to start with a lot of this stuff, right?
No, it's just like so many things that you just never tackle because it seems so overwhelming.
Yeah.
I know that our client who did buy the property that we're talking about, shout out, we love you. But we know that at the end of the day, it all worked out. Thank you so much to Jason and his hard work, because he went above and beyond. He is definitely a miracle worker with these deals. But the buyer said, oh my gosh, I had no idea how many people are involved. Like, I thought I just found an agent, we made an offer, there's a seller, their agent, we have a lender, and that's about it. But really, with the property management company, talking to different people on the HOA boards, different people on the loan side too that needed additional information, the contractors and engineers, it was a lot more people in play than normally would need to be in play, but we had unresolved issues.
Yeah.
And since then, another unit has sold in there. And
oh, really?
Yeah.
Oh, wow.
But you know what? You paved the way.
Yeah.
I have no idea who the agent or the.
Well, I'm sure the HOA was a little more prepared this time, because they realized, we just had to deal with this a couple months ago, right?
We crawled so they could walk.
Yeah. Because that was definitely a struggle initially, until I think they realized, the gravity of the situation here.
Yeah.
Hey, we can't get this done without you. Can you please help? Right.
Yeah.
So that's good to hear then, that they're.
Yeah. Another one turned around, and I think that it made our clients happy too. That, like, these places are sellable.
It gives them a little peace of mind, right?
Yeah.
Yeah.
Because I think a lot of people just don't realize how big of an impact this is going to have. And I think this brings up one other very important point, is that because we ran into this after the fact on a different property, we had nothing to do with it, but there are certainly lenders out there that because they don't understand this new scenario, they don't know where to go or how to structure it to get the answers.
Right.
And so they could easily have just denied a loan for somebody because they weren't proactive in finding other solutions.
Yeah, I mean, it is such a new thing that
Yeah.
depending on the lender that you're working with and the underwriter that's looking at your file,
Yeah.
that underwriter may be more conservative than another one.
Sure.
And may not be willing, they may just look at it as a guideline as black and white.
Yeah.
Oh, okay, there's this in the report. Sorry, we can't do anything for you, and they're not going to dig any deeper.
Right.
Right. In my case, I did not want to take no for an answer.
Love that.
I was like, no, I'm going to literally cover all my bases. And if I'm still being told no at the end of it,
Yeah.
well, then we'll have to live with it. But I felt like there was going to be a solution.
Yeah.
We just
You're
had to contact the right person and get that person to give us what we need in our file
Yeah.
so that we can still, get this loan done. And fortunately, we were able to do that. But yeah, I mean, there's a lot of lenders, again, that they don't, they're not going to look at the bigger picture,
Yeah.
right? And they may just say no.
Well, and there's a lot of sleuthing we can do when we are determined. When we know we have qualified buyers who, like, they pass the litmus test for getting pre-approved. And we know we have a complex where other properties have sold and have gotten loans in the last 6 to 12 months. Sure, something could change that could make it unfinanceable,
Right.
but probably there's a workaround.
Right.
So we just have to keep turning over rocks until we figure it out, or reaching out to the other agents that may have done a deal in there and connecting with those people to find out the answers. I mean, at the end of the day, our job is to help people and not just like say no and give up and move on to the next one. Because
Yeah.
people are people, they're not numbers.
Yeah, they're not numbers. I mean, it was even that way with the seller in the transaction.
Yeah.
Like, I was really, not just for our buyers, but our seller too. I was like, we got to figure out a way if there's a way to get this done, we have to figure it out.
Well, and how
Right.
much would it have sucked too? Like, from a selfish standpoint, if you said no, they turned around, put it back on the market, got a new buyer who had the same type of loan, and their lender pulled it off. And then you're like eating your hat because
Yeah, I mean, and then even with our buyers too, they're like, well, why couldn't Jason get that loan done?
yeah,
And now
someone
somebody else just went in and bought the condo that we want. They're not going to have a whole lot of confidence in me moving forward either, right?
Where there's a will,
So
there's a
where there's a
way.
will, there's a way for sure. And yeah, I mean, at the end of the day, if it's a hard no and we've exhausted every option possible, I mean, I get that.
I've
but,
never seen
yeah.
you give up, so total confidence in
Yeah,
you.
well, I appreciate that. Thanks. Yeah, I don't give up easily. I care about my clients, of course.
Yeah.
Because like you said, they're not just a number. They're not just a transaction. These are real people making the biggest purchase of their life. Sellers are, need to move too.
Yeah.
I mean, they've got a life to live and they've got plans. And, who are we to decide, oh, we just don't want to do it? I'm not going to try hard enough to make it happen.
Yeah, no,
Right.
for sure. We have to care about the people first.
Yeah.
And so that's one of the things, that's one of the reasons I'm so glad to have you here today. It's nice to have a success story. Also nice that it happened to be in Costa Mesa. Like, that wasn't even
Yeah.
why we were talking
Coincidence,
about
but
this.
yeah.
But heads up, Costa Mesa, there are a lot of condos around town. And so you do need to be prepared, whether you're an owner, a potential buyer, on an HOA board, know a neighbor who's on an HOA board. This is something you need to know about. If nobody's talking about it yet in your community, you better be the one to start ringing the bell.
Absolutely. Yeah.
It's coming around come 2026. These, correct me if I'm wrong, but the inspections are going to be required for all.
All the reports will be required as of January 1st of next year. Yeah.
So, I mean, we're like 6 months out. These structural engineers, they get booked up. So you need to get them on the books, get them out there to do the inspections. So then your HOA can have a plan of action. And hopefully you don't need any repairs. But if you do, it's going to be an impact for people next year.
Yeah. I mean, yeah, like you said, the sooner the better to get that report done.
Yeah.
Because then you know what you're working with, and you meaning the HOA board.
Yeah.
That way they can start, managing their budget or, allotting funds wherever it needs to be, or start taking steps to make sure that all of this is taken care of.
Well, and budgets, people start making their budgets for next year pretty soon here for the
Yeah.
HOAs. So if it's going to be a significant expense, that better be factored in now.
Absolutely. Yeah. Yeah.
Well, let's just circle it back to Costa Mesa just to tie this up with a bow. So you don't live in Costa Mesa.
I don't, no, but I went to school in the area, so I'm pretty familiar with Costa Mesa.
What's your read on the pulse of Costa Mesa? What do you consider it known for? Why do you hype it up?
Yeah, I mean, Costa Mesa has a lot, like we were talking about the community.
Yeah.
They have a lot of, and, like I said, I've seen in your videos as well, but there's a lot of community activities.
Yeah.
Costa Mesa is just I don't know, it's just got a really, really cool vibe.
Yeah, I agree.
For the city.
It's so close to the coast, but it kind of maintains an edginess too.
Yeah.
Or a preppiness. It really depends. I mean, you can flow whatever way you want to go in Costa Mesa.
Yeah. Yeah. I mean, there's all sorts of, things to do in Costa Mesa, whether you like to golf.
Yeah.
You can go over, there's 2 golf courses right next to each other.
Yeah.
Fairview Park's really cool.
That's where they do the summer concerts.
Yeah, I did cross country and track in high school and college, and we practiced both high school and college actually, and had races at Fairview Park.
Oh, that's pretty.
That's just a really and Fairview Park. I mean, it extends out, and then at the bike path right there down to the beach. That's just a really cool area. You've got the downtown area. You've got Triangle Square right on the border of Newport. That's a good hangout spot. A lot of cool restaurants and bars down there. There's just a lot of great places to hang out. The camp is another good one.
Yeah.
Yeah.
And it's affordable coastal living, especially when you compare it to like our neighbor Newport.
Right.
Yeah.
Yeah. I mean, you're almost in Newport, but you're not necessarily having to pay Newport prices.
Prices or taxes. So
exactly. Yep.
Yeah. Well, Jason, let everybody know where to find you because you are killing it on social media right now.
Well, thanks, Holly. Yeah. Again, I'm Jason and Thomas. We have 2 Jasons here actually, but Jason Thomas. I work with J&J Financial. You can find me. Well, I'll be on, I guess, on your video on social media here.
Yes.
I'll be tagged there. You can find me on Instagram and Facebook there.
Jason Thomas Mortgage.
Yeah.
Some
Jason
underscores.
Thomas Mortgage. Yes.
More underscores, I think, in there.
I believe I have an underscore in there. Yeah. Maybe we can tag it in there. Yeah.
Yes.
Yeah.
Yes. And again, he's with J&J Financial, and they're phenomenal. I've worked with multiple members of your team now, and everybody I've worked with has loved working with you. I've loved working with you. The other agents have even put you on their roster. So that says a lot too, because it's hard to get people to, think about jumping ship or whatnot. But when they have a good experience.
Yeah, thanks, Holly. Yeah, I mean, when it comes to getting a loan, I mean, let's be honest, if you don't have to get a loan, you don't want to get a loan, right? Nobody wants a loan.
Yeah.
So our philosophy here in our office, and my philosophy, of course, as well, is trying to make it as smooth of a process as possible and making sure our clients are as well informed as possible of what's going on and how everything works so that they're as comfortable as they can be in getting this loan. Because it's a really scary thing buying a house and having to get this massive loan with this big payment.
Yeah.
And if you've got somebody on the other end that's just, you're just a number to them and they're not explaining anything.
Right.
It's a little unsettling. So I try to make it as comfortable as possible for everybody.
You do a great job with that. I mean, I guess I have one other question now that you just said something. It sparked my interest. Yeah, sure, people don't want to take on loans if they are in a position where they don't have to. But do you find people taking on loans just so that they have more liquidity or leverage of their
Absolutely,
funds?
I mean, there's plenty of people that, if we're starting to talk about high net worth people, they'll buy a property for cash. For tax purposes to move money into a property, and then they'll do a cash out refinance because you don't pay taxes on a loan, for example. It really depends. There's a lot of people that are really savvy with their money.
Yeah.
And right now, maybe not so much because rates are in the 6 to 7% range.
Sure.
But especially when rates are a little bit lower, like in the 3, 4, 5% range.
Yeah.
People would rather get a loan and keep their other money and invest it because they know they can get a greater return than the rate that they're paying.
Right.
So yeah, absolutely. For those people, it's getting a loan isn't so scary. For your average person who doesn't have those options, like they have to get the loan regardless, and they're not putting a ton down. It's really nice to have somebody that's really informing you on how everything works, and also not even just during the transaction, but I always tell my clients after funding, hey, I'm not going anywhere. If you have any questions at all over at any time, I don't care if it's a year from now or when your tax bill comes out,
When
you don't
your
know what to do with
supplemental
it. Your
comes
supplemental bill, especially.
Yes.
In fact, I always tell them, like, when you get your supplemental bill, just give me a call.
Yeah.
We'll sort it out for you, and I'll make sure that you guys know exactly what to do with it.
Or when your impound bill comes,
or the impound bill, or there's so many ways. Yeah. There's so many things that can happen, but
Yeah.
I always let people know, like, I'm not here just for the loan. So you can bug me whenever you want with any questions you have.
Yeah, you're basically like
an advisor,
a
essentially.
mortgage advisor.
Yeah.
Is more of what you are.
Yeah.
Yeah, awesome. Well,
Absolutely.
Jason, thank you so much.
Thanks for having me, Holly.
Love your beautiful studio.
Oh, thank you. Yeah, we're really excited about it. Yeah.
I'm sure this background will be on plenty more videos in the future. So
absolutely.
Well, thanks for being here and tuning into the Costa Mesa Pod live, and we'll see you next time.
Thanks, guys.
Bye.
Thanks, Holly.